Thank you for tuning in to the market update with Russell Calkins for this August 15th, 2018. Currently, it's 5:07 Arizona time. I'm pulling up all my charts on investing.com just to show you where to get free charts because I'm mainly a technician, 80% technical, 20% fundamental. A little background, if you've not seen any of my videos before, I was a commodity trading advisor, cash commodities broker for over 40 years. So as a commodity trading advisor, since I started doing the market update with Russell Calkins, every single trade has made money. And to prove that, you can look at the past YouTube videos that I've done. I provide a chart with it. If the chart is not on the YouTube site, you can go to Facebook, my Facebook site, Russell Calkins, or you can go to Twitter, or you can go to Google Plus, or you can go to LinkedIn under Russell Calkins, and you can pull up these videos with the chart at the time that I gave these recommendations. Now that's real positive proof. People can say that they make money for their customers, but show me the proof and then I'll believe it. All right. And in this, it's very, very important to follow only those that consistently make money. All right. If they're consistently not making money, or they lose money half the time, or they lose money a quarter of the time, that could be very costly. I'm not recommending that you follow that individual. I'm also a position trader. So I'm just giving you the trades that I would do if I were still a commodity trading advisor. So right now I'm just doing educational videos so that you can take advantage of over 40 years experience trading in the cash and also the commodity futures and also the commodity futures options markets. I do very simple strategies. They are not complex. All right. I simply buy a position and I sell out of the position. All right. It's up to you to put in your stop losses because you know how much money you can afford to lose. And it's also up to you when to take profits because you may want to go for profits that I'm already out of the market and you may want to go for a longer stretch on it. Okay. So let's just be clear on that. And also the way it works on the dollars, which is very important to explain to you. If you have X amount of dollars, divide it by 10. Then take that dollar figure and divide it by 4. And then you want to make $4 cost average trades only if it goes against you. For why would you want a dollar cost average when it's going for you and raise your price or lower your price, whichever way you're going? It just doesn't make any sense. All right, you want a dollar cost average against you because it's like a rubber band. Once again, I keep explaining this, but if it's an indication where all my study signals say to get in it, all right, the rubber band's stretched pretty far already. Maybe let's just put it at a fourth of the stretch. If we're blessed enough to get the second trade the next day, because I use the daily chart, I will place my second dollar cost average trade only if it's against me in a good measure. Then on the third trade, the same thing happens. And on the fourth trade, everything happens. So let's take the last 4 recommendations that I've given, the dollar index. I'm still in it. We started out at 95 even. And our next trade, we dollar cost average at 95.47. Our next trade, we dollar cost average at 96.20. And yesterday, we dollar cost average at 96.57. So even though it closed at 96.59, our dollar cost average price is 95.81. Does that make sense? So you just add those 4 figures that I just gave to you and you divide it by 4 and you will get your dollar cost average price. So we are currently at 96.59. So the last thing is I won't dollar cost average for the 5th time. because the rubber band's stretched to the max already. Even if it goes higher, I'm very confident that it's about to go my way in a big way. All right. So the most excited times I get is when I'm able to dollar cost average 4 times. Because of the little amount of money that I use, which could be a lot of money, by the way, but the little percentage that I use of the money that I have to do this, I'm able to do these dollar cost average positions. If it makes money right off the bat on the first trade, fine. Pick the time you want to make the profits. Also pick your stop losses in. All right, so we're holding on to the dollar index right now. All right, the very exciting markets: platinum, palladium, silver, gold, and of course the dollar. If the dollar goes back down, what do silver and gold normally do? They go up. All right, so we're kind of doing the same position, only we're buying one, and in the dollar we're selling it, if that makes sense to you. So we're looking at the gold market right now. On the gold market, okay, the most active month, you always want to stay with the most active month, whether you're being in the options markets or the futures markets, on the way I do it. All right, we're using the daily chart. I use candlestick charting instead of a bar chart. I use candlestick charting. And on investing.com, it's very easy to choose those methods. Okay, so if you want to follow along with what I'm doing, I'm showing you how to follow along with it. I also recommend that you paper trade. If you've never done this before, paper trade this advice that I'm giving you, and see if your paper trades are making money. Okay, paper trades are totally different than actual dollar trades, because actual dollar trades, you kind of get emotional about it, and you may make decisions that you might not necessarily want to do. If you stay disciplined, you won't do it. So I recommend wholeheartedly that you stay disciplined on all your trades. Do not let emotions get involved, because they will eat you alive. All right, just be calloused about all that. Stick with the charts, okay? Because I believe if there is a future to be told, it is in the numbers or the charts or the steady indicators all added up together. So we're in the gold right now, and currently gold closed at $1,179.40 per troy ounce. So in other words, 1179.30. So you want to be a buyer on gold right here at 1179, currently 1179.4. So we're going to write that down, 1179.40 on our gold trade. Okay, you want to be a seller on gold at $1,242.17. And of course, past performance never, ever, ever guarantees future profits. Thank you for tuning into the Market Update with Russell Calkins. Be sure to tune in tomorrow for a brand new market, or unless the gold market stays down at this level and goes lower, we'll be able to put in our second trade. By the way, your fast and slow stochastics is another steady indicator that I'm using on this gold chart. Your fast stochastics right now are at 1.0, and your slow stochastics right now are at 1.34. Remember, 0 is about as far as it'll go down. So your steady indicators are just perfect to buy the gold, technically speaking. Now, the other 20% of the things that I look at are the fundamentals. But the reason that I'm only 20% fundamentals is because mainly fundamentals are news. Okay, Russia invades Afghanistan. They raise the discount rate today, or whatever. Those are technicals, are the numbers or the charts or the steady indicators, or in a combination of all of them. So the bottom line is you want to buy the gold right here. And thank you for tuning into the Market Update with Russell Calkins, and may God bless you.